Florence, 1397. A man named Giovanni di Bicci de' Medici opens a bank. It is not the first bank in Italy, far from it. There are dozens of money changers and lenders in Florence, Venice, Genoa, Siena. But Giovanni's bank will do something different. Within a few decades, it will become the largest financial institution in Europe. It will finance popes, pay armies, build cathedrals, and, incidentally, fund the Renaissance, the most important cultural explosion in Western history. How did they pull it off? Not with swords, like the Templars. Not with the protection of the gods, like the Mesopotamian temples. With numbers. With ledgers. With a tool that sounds mind-numbingly boring but changed the world, double-entry bookkeeping. And with a deep understanding of something that bankers still practice today, how to make money by lending other people's money, without anyone noticing you are charging interest in an era when charging interest is a mortal sin. In the two previous episodes, we saw how banking was born in Mesopotamian temples, professionalized in Greece, and became an international network with the Templars. But the Templars were destroyed in 1307. The banking baton passed to Italy. And within Italy, to Florence. And within Florence, to a family that started changing coins at a market table and ended up dominating the politics, culture, and finances of Europe. The Medici. Today we are going to see how they transformed banking from an artisan trade into a sophisticated industry. And how, in the process, they bequeathed us tools we still use. Giovanni di Bicci de' Medici founded the Medici Bank in 1397. He did not start from scratch, his family had been in the money-changing business for generations. But Giovanni had vision. He understood that the real business was not in changing coins, but in managing money on a grand scale. His first big move was opening a branch in Rome. Why Rome? Because that is where the Vatican was. And the Vatican was the richest institution in Europe. It received tithes from all of Christendom, paid thousands of employees, financed buildings, embassies, armies. Giovanni secured the Medici Bank as the manager of the papacy's finances. It was like landing a giant multinational account today. Overnight, his bank had access to enormous money flows crossing all of Europe. When Giovanni died in 1429, the bank was already the largest in Italy. It had branches in Rome, Venice, and was expanding. His son, Cosimo de' Medici, took it even further. Under Cosimo, the bank opened branches in Geneva, Bruges, London, Avignon, Pisa, and Milan. Each branch had a local director with some autonomy, but all answered to headquarters in Florence. It was a multinational corporate structure in the 15th century. Cosimo understood something that remains true today: a bank is not just a place where money is stored. It is a network. The more nodes the network has, the more useful it is. And the more useful it is, the more people use it. The Catholic Church prohibited usury. Charging interest on a loan was a mortal sin. And in a society where the Church controlled public morality and where the Vatican was your best client, openly charging interest was not an option. The Medici found an elegant solution: the bill of exchange. Here is how it worked. A merchant in Florence needed money to buy wool in Bruges. The Medici Bank in Florence gave him florins. In return, the merchant signed a bill, a document promising to pay in Bruges, in local currency, at a future date. The exchange rate between today's florins and Bruges currency in 3 months included, concealed, a profit for the bank. It was not a declared interest rate. It was a currency difference. But in practice, the bank was charging for lending money. The beauty of the system was that it was technically legal. The Church prohibited charging interest on a money loan. But exchanging one currency for another at an agreed rate between the parties was not usury. It was commerce. The Medici did not invent the bill of exchange, it had existed for decades. But they perfected it and turned it into the most important financial instrument of medieval Europe. And the bills had another advantage: they moved money without moving metal. Just like the Templars' letters of credit, but more sophisticated, more scalable, and perfectly integrated into international trade. And now comes what sounds boring but is revolutionary. Before double-entry bookkeeping, merchants kept lists. A list of what people owed you. A list of what you owed. A notebook where you jotted down income and expenses. It was messy, prone to errors, and easy to manipulate. Double entry works differently. Every transaction is recorded twice, once as a debit and once as a credit. If the bank lends 100 florins to a merchant, a reduction of 100 florins is recorded in the bank's cash and an increase of 100 florins is recorded in the merchant's account as money receivable. The two entries balance. Always. If at the end of the day the debits do not match the credits, there is an error. And you can find it. That sounds like a technical detail. But think about what it enables. It allows you to know, at any moment, how much the bank has, how much it owes, how much it is owed. It allows you to detect fraud. It allows a director in Florence to supervise what the Bruges branch is doing without going to Bruges. It allows decisions based on data, not intuition. Italian bankers, including the Medici, used this system from the 14th century. But it was a Franciscan friar named Luca Pacioli who codified it in writing in 1494, in a mathematics book titled Summa de Arithmetica. Pacioli did not invent double entry, he described it. But by publishing it, he made it accessible to everyone. Pacioli is called the father of accounting. And it is no exaggeration to say that without double entry, modern capitalism would not exist. Because without a reliable accounting system, you cannot manage a bank with branches in 10 cities. You cannot know if you are making or losing money. You cannot scale. Every company in the world today, from a corner shop to Amazon, uses double entry. It is the invisible foundation of the entire modern economy. The Medici understood something that few bankers before them had grasped with such clarity: money is political power. Cosimo de' Medici used the bank's wealth to control Florence. Not officially, he was never king or president. But he financed loyal politicians, sponsored artists and architects who gave him prestige, and lent money to those it suited him to have in his debt. He financed the construction of churches, libraries, hospitals. He paid Brunelleschi to finish the dome of Florence's cathedral. He funded Donatello, Fra Angelico. His grandson Lorenzo de' Medici was patron to Botticelli and the young Michelangelo. The Renaissance, that explosion of art, science, and culture that defines Western civilization, was possible in large part because a family of bankers decided to invest their money in beauty and knowledge. For motives that mixed genuine cultural interest with political calculation, yes. But the result was extraordinary. However, the bank also eventually fell. Later Medicis were less capable than Giovanni and Cosimo. They lent too much to clients who did not repay. Some branches were poorly managed. And when the family became too involved in politics, wars, papacies, intrigues, the bank suffered the consequences. It closed definitively in 1494, nearly a century after its founding. The lesson repeats. The same pattern we saw with the Templars. Banking and political power attract each other. But when they get too mixed up, the result is usually the ruin of one or both. Why should we care about a family of Florentine bankers from the 15th century? Because the Medici left us something that goes beyond paintings and cathedrals. They left us the intellectual infrastructure of modern finance. Double-entry bookkeeping, that apparently boring tool, is what allows a company of 100,000 employees to know whether it is making or losing money. It is what allows an auditor to detect fraud. It is what allows an investor to read a balance sheet and decide whether to trust a company. When a company goes bankrupt and auditors say the books did not add up, they are saying someone did not follow the rules that 15th century Italians established. Enron, Wirecard, Parmalat. In every major modern financial scandal, double entry was there and someone manipulated it. And the bills of exchange, those documents the Medici used to move money from Florence to Bruges, are the direct ancestors of the financial instruments that move trillions of euros around the world every day. The Medici did not invent banking. But they modernized it, made it scalable, connected it with power, and left us the tools with which we continue building. 5 key ideas from this episode. First, the Medici Bank, founded in 1397, became the largest financial institution in Europe thanks to its network of branches and its relationship with the Vatican. Second, bills of exchange allowed lending money without calling it a loan, circumventing the prohibition on usury. Interest was disguised in the exchange rate. Third, double-entry bookkeeping, codified by Luca Pacioli in 1494, is the invisible foundation of the entire modern economy. Every transaction is recorded twice, debits and credits always balance, and that allows supervision, error detection, and scaling. Fourth, the Medici turned money into political power. They financed the Renaissance, controlled Florence, and bought papacies. Banking and politics became inseparably intertwined. Fifth, the bank fell when the heirs mixed too much politics with too little financial prudence. The same pattern that destroyed the Templars: banking and power attract each other, but when they get confused, both suffer. The Medici gave us modern banking. Branches, bills of exchange, sophisticated accounting. But there is something the Medici did not discover. Something that required a different kind of person, not an Italian banker, but a London goldsmith with a vault full of other people's gold. One day, that goldsmith realized something. He had 100 gold deposits in his vault. But in any given week, only 4 or 5 people came to withdraw their gold. The rest trusted it was there, without checking. What if he lent some of that gold that nobody was claiming? The depositors would never know. And the goldsmith would earn money on money that was not his. That sounds like a scam. But it is the foundation of all modern banking. It is called fractional reserve. And that is what comes next.